Did you know you can still buy rental properties in the US for under $250K and actually make positive cash flow every month? Exploding Head, most investors completely overlook these cities, but today, I'm showing you the hidden gems where your money works for you. Can you guess which states made the list? If you're a beginner or experienced investor looking for high cash flow properties, you've come to the right place. Today, we're diving into the most overlooked U.S. cities where rentals under $250,000 actually generate income, and I'll even quiz you along the way, so get ready. Hit subscribe and turn on notifications. Cleveland, Ohio. First up, Cleveland, Ohio. This city is often ignored, but it's actually a goldmine for investors. A typical 3-bedroom home here can go for $180,000, and the average monthly rent is about $1,450. That leaves roughly $500 a month in cash flow after expenses. Not bad for a market many people overlook. Why overlooked? People think Cleveland is old or declining, but it has strong rental demand near hospitals, universities, and downtown areas. The city is also investing in revitalization projects, which means property values could rise steadily. You could even find some multi-family properties under $250,000, giving you multiple rental units in one investment. Quiz. Guess the average monthly rent for this $180,000 property in Cleveland. A. $1,200 billion, $1,450 C, $1,700. Answer. B. $1,450 white heavy checkmark. Pittsburgh, Pennsylvania. Next is Pittsburgh, Pennsylvania. Homes under $200,000 here rent for around $1,600 per month, leaving investors about $400 per month cash flow. People often skip Pittsburgh because they think it's all industrial or too cold to rent, but the city has a booming tech sector, healthcare industry, and steady student population, which creates consistent rental demand. Fun fact, Pittsburgh has one of the lowest unemployment rates in the region, making tenants more reliable. It's also a college town with universities like Carnegie Mellon and Pitt, meaning long-term rental opportunities for student housing. Quiz. Which city has higher cash flow for $200,000, Cleveland or Pittsburgh? Answer. Cleveland slightly edges out for cash flow. Pittsburgh offers stability. Indianapolis, Indiana. Indianapolis is often skipped, but it shouldn't be. A $210,000 property rents for about $1,650 per month, leaving roughly $450 per month in cash flow. The city has low property taxes, affordable cost of living, and a growing job market, especially in healthcare and logistics. Investors overlook it because it's not as glamorous as coastal cities, but secondary cities like Indianapolis often outperform in cash flow because prices are low but rent demand is high. Plus, there are neighborhoods with high occupancy rates and steady tenants, making it ideal for long-term investing. Buffalo, New York. Buffalo, New York is next. Homes under $200,000 rent for around $1,400 per month, giving about $350 per month cash flow. Many investors overlook Buffalo because of cold winters and old industrial image, but the city is experiencing a renaissance. Revitalized downtown areas, new businesses, and growing healthcare and education sectors are bringing life back to the city. Investors who are willing to embrace these markets often see long-term returns other cities can't match. Plus, Buffalo has affordable housing stock that allows entry-level investors to get started without huge loans. Quiz. Which city has the highest cash flow so far? Cleveland, Pittsburgh, Indianapolis, Buffalo. Answer. Cleveland white heavy checkmark. Birmingham, Alabama. Heading south, Birmingham, Alabama offers homes under $190,000, renting for about $1,350 per month, giving roughly $400 per month cash flow. Many investors skip Alabama because they focus on big markets like Atlanta or Dallas, but Birmingham has growing employment hubs, affordable neighborhoods, and strong rental demand. It's a city that rewards investors who look beyond the obvious metros. Job growth, population influx, and affordable properties make Birmingham a hidden cash flow gem. Some areas even allow investors to buy multi-unit properties under $250,000, boosting potential returns. Kansas City, Missouri. Kansas City is another overlooked gem. $220,000 homes rent for around $1,700 per month, leaving roughly $500 per month cash flow. The city's rental laws are investor-friendly, and it has a growing tech and logistics sector that attracts long-term tenants. Investors often skip Kansas City because it's in the Midwest, but it's actually a perfect mix of affordability and steady cash flow. Certain neighborhoods also have low vacancy rates and high rental demand, making it ideal for buy-and-hold investors. Quick quiz before we continue. Which city do you think offers the highest cash-on-cash return for a $200,000 property? Thinking face comment below. Hint: it's not the first city we discussed. Now, if you want to find overlooked cities yourself, here's how. KeyCap 1. Look at median home price versus average rent. That's your cash-on-cash potential. KeyCap 2. Check population growth and employment hubs. More tenants means less vacancy. KeyCap 3. Don't ignore secondary cities. Small metros often outperform big cities in cash flow. KeyCap 4. Watch out for property taxes and HOA fees. They can eat into your profits if overlooked. So there you have it: Cleveland, Pittsburgh, Indianapolis, Buffalo, Birmingham, and even Kansas City, the most overlooked U.S. cities under $250,000 where cash flow is real. Which city would you invest in first? Comment below. Backhand index pointing down. I want to know. If you found this helpful, hit subscribe and turn on notifications. I post weekly tips to help you build cash-flowing real estate portfolios without the guesswork.